Hey, Phil here. Today I wanted to talk to you about why I like the interest-only mortgage. Well, the first thing is the payment with an interest-only mortgage is lower. If you're not familiar with how they work, typically the payment is interest only for the first 10 years, and then whatever balance is left, the balance is amortized over the remaining term of the loan, which is typically in 20 years. So for the first 10 years, you only have to pay the interest. So the payment's lower than if you're paying principal and interest. It isn't like a lower payment. Next, did you know that every time that you make a principal payment, you could be possibly raising the amount of taxes you pay? And the reason that is because as you pay principal, the amount of interest you're paying goes down. So at the end of the year, when you get your 1098 form from your lender, that every time you pay principal, that interest part on the 1098 form decreases. Consult with your CPA, of course. I'm not a CPA, but that is a possible implication of paying principal. The next thing is unforeseen circumstances. Suppose you have a home with someone else, you're both on the mortgage, you're both helping contribute to the payment, and suppose one of you unexpectedly passes away. Well, it's a heck of a lot easier to make a payment on interest only with just one source of income than it is to pay principal and interest with one source of income. So with that lower payment, you might be able to keep the home rather than have to sell it. Next, instead of paying that principal, that money may be better used somewhere else, such as paying off credit card debt, car loans, student loans, maybe funding a life insurance policy, maybe putting money aside in a college savings plan. So you need to think, am I better off putting this money into the house, or am I better off funding these other vehicles that may make my life better? Lastly, flexibility. The interest-only mortgage offers more flexibility than a principal and interest loan because you can pay principal whenever you want and how much ever you want during the interest-only period. So you could pay $10 in principal one month, and then the next month pay $10,000. And the beauty of it is that as you pay down principal on your terms, the interest-only payment the next month goes down because the interest due is based on the declined balance. So those are the reasons I like the interest-only mortgage. So if you ever want to talk about the interest-only mortgage or any other mortgage issue you have, I'm here to help. Have a great day.